Millions of people across America who rely on Social Security each month must understand what financial institutions are silently implementing at this moment. If you remain unaware of this development, your upcoming deposit might appear considerably different from your expectations. Welcome back to Visa Path USA. My name is June, and today we are examining something that impacts retired individuals, Americans with disabilities, and SSI beneficiaries throughout the nation. This is not speculation, and it is not partisan discussion. This is an actual operational modification occurring within the banking infrastructure right now, and it directly affects the timing when your Social Security funds reach your account. We are going to review every important element so that when this video concludes, you will understand precisely what is taking place, the reasons behind it, and crucially, what actions you should take. Let us begin with the overall situation. Social Security is not merely a federal program for countless millions of elderly Americans. It is the cornerstone upon which their complete financial stability depends. We are discussing monthly payments that handle housing costs, food purchases, medical prescriptions, household expenses, and everything else that maintains everyday life functioning. When anything alters regarding how or when those funds arrive, it carries significant weight. Even a difference of several hours can generate genuine concern for individuals who depend on that deposit to handle a pressing obligation. That is the reason this development requires your complete focus at this time. So what precisely is being modified? Financial institutions throughout the United States are implementing a new tier of processing for incoming federal deposits, and Social Security payments fall directly within that classification. This new procedure includes additional computerized verification measures that banking organizations are now conducting before they release funds into your accessible balance. These measures are intended to validate that a deposit is authentic, that the account accepting it is correctly connected and protected, and that no deceptive activity is detected before the money becomes usable in your account. Now, here is the aspect that many individuals are not understanding properly. This modification does not originate from the Social Security Administration. The SSA is still transmitting your payments precisely on their established timeline. The payment amount you are entitled to has not been altered. Your qualification has not been altered. The scheduled dates when SSA sends those payments have not been altered. What is being modified is what occurs after that payment departs the government and arrives at your financial institution. That is when the new processing protocol becomes active, and that is what you must comprehend completely before your upcoming payment date comes. For many years, electronic deposit has been the preferred standard for obtaining Social Security benefits. It removed paper checks, eliminated the possibility of postal delays, and placed money into accounts quicker than any alternative approach. The federal government has promoted electronic deposit strongly because it functions dependably and effectively. Financial institutions constructed their systems around managing these digital transfers seamlessly, and most beneficiaries grew to anticipate that their deposit would show up exactly on schedule without any complications. That anticipation influenced how individuals organize their obligations and handle their finances month after month. But the banking world does not remain static. Banking systems are constantly advancing, and protection challenges are advancing right alongside them. Digital payment deception has increased dramatically in recent years, and government benefit payments have become a particular focus. Criminals attempt to interrupt transfers, establish fraudulent accounts to capture misdirected funds, and take advantage of weaknesses in the verification procedure. Banking organizations have been required to react by improving their internal deception detection systems and including new control points to the payment management procedure. The development that financial institutions are now implementing is a direct result of that reaction. Here is what this appears like in practical terms. When your Social Security payment reaches your financial institution electronically, the banking system now processes it through a more comprehensive verification procedure before applying it to your account balance. This procedure is computerized, and in the overwhelming majority of instances, it finishes very rapidly. We are not discussing a postponement of multiple days. For most individuals, this will be a question of hours, and in numerous instances, you might not observe any variation at all. But there will be a segment of beneficiaries who examine their account on the anticipated deposit date and discover that the balance has not refreshed yet. If that occurs to you, it does not indicate something malfunctioned. It indicates your financial institution is still processing the funds through its verification system before releasing them. Why is this verification required? Financial institutions have substantially reinforced their deception detection capabilities in reaction to the dramatic increase in payment deception affecting the banking system. These systems utilize computerized tools that examine incoming deposits and search for indicators that something might be irregular. They evaluate account background, verify payment information, and assess transaction behaviors against what is regarded normal for that account. If something activates a warning during that examination, the system retains the payment temporarily while supplementary checks are finished. In most circumstances, this examination concludes within the identical business day, and you never even need to become involved. Consider how many digital payments flow through the American banking infrastructure every single day. Employment transfers, commercial payments, government distributions, automatic obligation payments, and innumerable other transactions all travel through the identical electronic infrastructure simultaneously. Financial institutions are working to upgrade that infrastructure to manage this tremendous volume while keeping every transaction precise and protected. Government benefit payments like Social Security constitute a significant portion of that monthly transaction volume, which is one explanation why these revised procedures were created with that classification specifically in mind. This raises an important question. If different financial institutions are managing this procedure, does that mean every beneficiary will encounter it the same way? The response is no, and that is worth comprehending. While the general trajectory of this development is uniform across the banking industry, individual financial institutions have their own internal systems and their own schedules for implementing new procedures. That means some beneficiaries may observe modifications sooner than others. Some financial institutions may handle these additional verification measures faster than others. Your particular encounter depends partly on which banking organization maintains your account and how their systems are constructed. For most individuals, this will stay completely unnoticeable. Your deposit will appear in your account at approximately the identical time it always has, and nothing about your routine will need to alter. But if you are one of the beneficiaries whose financial institution requires a bit longer to finish the verification procedure, understanding this beforehand eliminates the alarm that comes from not comprehending why your money has not shown up yet. Being educated is always superior to being caught off guard, particularly when your monthly budget relies on that payment arriving. Now, let us discuss what you should practically do with this information. The first and most actionable measure is to ensure your electronic deposit details on record with the Social Security Administration are totally accurate and current. This is extremely important. If you have lately switched financial institutions, terminated an old account, or established a new checking account, you must update those banking details with the SSA right away. When your payment is sent to an outdated or wrong account, it generates difficulties that extend well beyond a simple processing postponement. Maintaining your information current guarantees that funds transfer smoothly from the government straight to the correct destination. The second thing you should do is begin tracking your account more consistently around your anticipated payment date. You do not need to constantly check every few minutes, but simply being in the practice of accessing or checking your balance on the day your deposit is planned gives you an accurate, immediate picture of what is occurring. If the payment displays as pending, that is a standard part of the new verification sequence. If it has not shown up by the conclusion of that business day, that is the appropriate time to contact your financial institution directly for explanation. The third suggestion that financial experts regularly provide to Social Security beneficiaries is to keep a small financial reserve in your account whenever feasible. This does not mean you require a substantial savings reserve. Even maintaining enough to handle one or two critical expenses gives you flexibility if a deposit requires a few additional hours to complete. Life does not stop because a financial institution needs slightly more time to validate a transaction. And maintaining a reasonable buffer means you are not placed in a difficult situation over what is fundamentally a temporary timing variation. Here is something else that warrants attention. The emergence of this kind of banking development often gets misused by criminals who utilize actual news as disguise for deceptive alerts. You might obtain a phone call, a text message, or an email alleging to be from your financial institution or from the Social Security Administration, stating that your payment has been postponed or that your account requires to be validated right away. These messages might sound legitimate and they might reference things that appear correct because they are constructed around actual news stories just like this one. Do not reply to unexpected contact with your account number, social security number, banking credentials, or any other confidential information. Legitimate financial institutions and legitimate government agencies do not function that way. The SSA will not call you unexpectedly demanding verification before releasing your payment. Your financial institution will not transmit you an email requesting you to select a link and verify your identity in order to obtain your deposit. If you obtain any communication like that, disconnect, remove the message, and reach out to your financial institution or the SSA directly using the official contact information you locate on their authenticated websites or the reverse of your bank card. Safeguarding yourself from deception begins with being doubtful of unexpected contact, particularly when it concerns your benefits. The wider context for all of this is that the American banking system is experiencing a substantial technological transformation. Digital payments have substituted paper in nearly every area of banking, and the infrastructure supporting those electronic transactions must regularly be improved to maintain pace with both volume and protection requirements. Social Security payments are one of the biggest single classifications of monthly digital transfers in the country, guaranteeing that this massive flow of funds is managed with precision, speed, and robust fraud. Prevention is a mutual priority for the government and for every banking organization participating in delivering those payments. For seniors and others who have obtained these benefits for years, modification of any kind can feel concerning. That is entirely understandable. When your financial protection relies on a monthly payment showing up dependably, even a minor adjustment in the procedure warrants a transparent and straightforward explanation. What this development signifies is not a danger to your benefits. It signifies the banking system performing what it is intended to do, which is safeguard your money and ensure it reaches you safely rather than being intercepted or redirected before it arrives to your account. The Social Security Administration continues to function on its established payment timeline. Retirement benefits continue to be distributed based on the beneficiary's birth date. Supplemental Security Income payments continue to be sent on the first of each month. Disability benefit payments continue to adhere to their regular calendar. None of that has changed. The SSA's function in this procedure remains precisely the same. The agency determines your benefit, establishes your payment date, and sends the funds electronically. Everything after that point falls within the responsibility of the banking system. Comprehending where SSA's responsibility concludes and where your financial institution's procedure starts is actually quite beneficial when you are attempting to understand a payment postponement. If the SSA has transmitted your payment and it has not shown up in your account yet, the explanation is almost definitely related to your financial institution's processing schedule rather than anything malfunctioning on the government side. That distinction helps you understand who to reach out to and what questions to pose if you ever need to follow up. Contacting your financial institution is typically the quicker path to obtaining responses about deposit timing once you understand the payment has been sent. One more thing worth mentioning is the long-term trajectory of all of this. The banking industry is not finished advancing. New payment technologies, stronger verification systems, and more advanced deception prevention tools will continue to be created and implemented in the years ahead. Each of these enhancements is focused on making the system more dependable and more protected for everyone who relies on it. As a Social Security beneficiary, you are at the center of one of the most critical financial systems in the country, and developments like this one are part of how that system continues to operate at a high level. Remaining educated is the single most effective thing you can do as a beneficiary. When you comprehend how these systems function, modifications stop being frightening and start making sense. You can organize appropriately, pose the right questions, and avoid being deceived by individuals who attempt to utilize confusion as a tool to exploit you. Information is genuinely protective when it comes to your financial protection. June and the complete team here at VisaPath USA are dedicated to ensuring you always have the most transparent and most precise picture of what is occurring with your benefits and with the systems that deliver them. Our responsibility is to eliminate the confusion and clarify what actually matters in straightforward language so that nothing surprises you unexpectedly. If this video assisted you comprehend the new financial institution processing protocol more clearly, please take a second to give it a like right now, because that single action informs us to continue producing content precisely like this, and it helps others who require this information locate it more easily. This channel exists to keep you educated, and we are appreciative every time you tune in. To recap everything we have discussed, financial institutions are implementing additional verification procedures for incoming government deposits, including Social Security payments. These procedures are created to safeguard beneficiaries from deception and to upgrade how banking organizations manage large volumes of digital transactions. For most individuals, the effect will be minimal or completely unnoticeable. In situations where a slight postponement happens, it will typically conclude within the identical business day. The Social Security Administration is not modifying its payment timeline or benefit amounts. Your money is still being transmitted on schedule. What is being modified is the brief moment between when your financial institution obtains that payment and when it shows up in your accessible balance. Maintain your SSA electronic deposit information current. Track your account around your payment date. Keep a small financial reserve when you can. Be watchful to criminals who might utilize this news as disguise for deceptive contact, and remain connected with VisaPath USA so you are always the first to understand when something important changes. June will be right here with the following update.